Hi, welcome, welcome, welcome. Thanks for attending this 30-minute segment with me where we are going to talk about something like super exciting. I'm extremely excited. We've built up to this and been planning this for a long time. So let me just tell you what the mission was, okay? And why we're talking today about this cap out. All right. You guys have seen us talk about the cap out over the last, I don't know, 6 months or so. But the ultimate plan was to bring the absolute best commission structure to the loan officer, right, in the mortgage space. We've seen some of this happen already in the real estate space. It's actually caught on like wildfire. So, very early on, I can just give you an example of what we're doing that will be a point of reference that you can relate to. Okay. Everybody knows Keller Williams. They know they kind of started the whole cap out thing on the real estate side, meaning that the amount of money that you're paying the mortgage, the real estate company is capped annually. You'll only pay them so much. Okay. Then we see the likes of EXP, who now is the biggest real estate company in the world, I believe. EXP, Real, I don't know, there's like 15 other ones out there now, all using this same model. We've seen the predominant growth on the real estate side be at companies that have this similar structure that Keller Williams started out. On the mortgage side, we don't have this at all. There's not one company that truly has, on an annual basis, what exists on the real estate side. On the mortgage side, every single mortgage company will keep their hand in your pocket on every single transaction you do. Okay. There's never going to be an end to the amount of money that they're going to take from you annually. Okay. The framework has been one in which we sort of say, oh, it's more expensive to do mortgage, or it costs the company X amount, or this or that. That's the justification around the mortgage company charging a percentage on every single loan. But we figured out through our technology, through our systems, through our training, through our knowledge base, how to create a structure where we can actually emulate what they're doing on the real estate side and capping out the commission on the broker side and non-delegated as well, because we're broker and non-del. Okay, so that's my little preface. I'll now let the presentation or the slideshow guide me into the rest of what we're going to talk about today. All right. So, little background on myself. I'm going to go really quickly here. President and CEO of Client Direct Mortgage. I started originating 10, 11 years ago. I got into the business. In that 10, 11 years, I became a top producer. Okay. Many of you probably know me from the Scotsman Guide. We used to do a couple $100 million a year, lean and mean, group of five. And to be quite honest, that enabled me to do and understand a lot of the nuances that are benefits are the way we get over hurdles, right? In the now bigger platform side. Now I'm out of originating and I am all about serving you as the loan officer and developing the best platform in the space. Okay. The IT background is important as well, because without that ability to have that career before, we would not have been able to develop the structure that we did, suppress the cost that we have in order to make this thing work. Okay, so let's go through the agenda, if you will. So we have the flat file per file fee. Okay, we'll talk about the cap out. We'll talk about the now non-delegated. You can turn it off. Power. Yeah. We'll talk about the non-delegated. We'll do the business development and leads, compensation, and platform processing, onboarding, coaching, and client direct. So you'll get all that stuff as we walk through this. That one. Yeah. Okay. So we talked about the $12.50 per file. Okay. You're only going to pay $12.50 until you reach the annual cap out. So this is important. Let me just break this down for you. Okay. We're non-delegated and we're brokers. So we do both sides of the business, if you will. Okay. You're going to have options for that. And we'll talk about that as things move down the road a little bit in this presentation. But the total amount we're going to take on all of your non-delegated deals is $12.50. Okay. Also on your broker deals is $12.50. And then once you get to 16 non-delegated deals, you will have reached $20,000. That's your cap. So if you want to do the math on this, 1,250 times 16 equals $20,000. Okay. After you get to the $20,000 point, you will then not pay anything to be able to use our platform. In other words, that 1,250 is going to come back to you. So if you're a loan officer out there and you're doing 40 deals a year, right? You're paying your company on every single one of those deals. With us, you're going to get extremely competitive rates, and you're only going to pay on 16 of those deals. So that's the thing that's absolutely amazing with our platform. There's a limit for the corporate side of things. Okay. So we kind of got into this. This was the math that I was just talking about on the cap out. Okay. Let's talk about how you're paid. Compensation, we do 1099. Okay. 1099, except for the few states that require us to say W-2. So if the regulators come in and say, oh, we're a W-2 state, Georgia, South Carolina, Illinois, a couple other ones. I can't remember all of them off the top of my head, but they're W-2. Otherwise, 1099. 100% commission job, and pricing incentives you'll control. So for you brokers out there, you might be used to doing borrower paid versus lender paid. That'll still exist for you. And you'll also be able on the non-delegated side to control your price and sort of like give pricing incentives where you need to. Okay. Now let's just talk about what the company is made up of. We're a lender ourselves, but of course there's investors above us where we send these loans. The thing that's unique about us, I would say, we come from a broker spirit. Okay. I started off as a broker. All those years I was a top originator was as a broker. Okay. 2018, I started the path to become non-delegated. And I really want to I really want to give and discern between us and the other companies that you might be looking at out there that say they're non-delegated as well on the broker side. Because we actually have 20 or up to 20 non-delegated lenders. We do our own disclosures. We have doc magic. Okay. So this is important because many companies will not work with you on the non-delegated side if you don't have this infrastructure in place. We use Meridian Link LOS, the enterprise level LOS system. I'm getting ahead of myself, use Salesforce, an enterprise CRM and platform system. All of these things make it to where we can have the benefit of non-delegated can actually be received by you as a loan officer, and we don't just have it to take margin or to charge more than 1% on VA. So a lot of our competitors out there, whether you're talking about Barrett, whether you're talking about I don't know if C2 or I know Edge doesn't have lines or whatnot. Nexa has Accent. I don't know. Listen, if you're looking at us, they're going to have to work, those particular companies almost work exclusively with like UWM. Why? Because they do the disclosures for you. It's just like brokering. So you don't have the real benefit and flexibility of true non-delegated. It's not true non-delegated, right? So if you look at a lot of these companies, whether you look at a U-Mortgage or this or that, they are not doing their own disclosures, so they can't work with PennyMac, right? PennyMac's great. They cannot work with NewRez. NewRez is great. They cannot work with NextBank, who has a 6-month arm, which I sold a lot of that 6-month arm, if you guys know about that, right? We have that, and we have warehouse lines with them, right? So it's like the optionality is more. So you guys really have to dig in and understand what these different companies have, okay? And then that way you can figure out what the true benefit is to you. What are the true benefits? More products, better pricing. Much better pricing, right? So you could think of it from the perspective of like, wow, I'm coming into this client direct platform. They have way better technology, way more access to more products and more competition, okay? And at the same time, Ramon is not charging me to do this. Ramon is not what we call stepping on the price, if you will, right? I'm not putting that big layer of margin that a lot of you retail loan officers have out there at Cross Country, at American Pacific, at Movement Mortgage, right? And all of those companies, listen, they have that same technology, but you're paying for it and you pay healthy. You pay, I don't mean to laugh, but you pay a lot. But I get it. I get it. If you go to the other side of some of these companies, they don't have the platform and technology. We are the solution. We are the hybrid. You now get access to pricing as though you were a broker, but you do not lose the technology, the platform, the capability, the optionality, and all those other things that you're used to. So that's the thing that's amazing about us. Okay. Woo, I've stayed on that one for a little while. All right. If you're in the broker world, you also know that you have product diversification. So we have all the conventional government-backed non-agency, non-QM, free credit reports. Yes, say it one more time. Free credit reports. We know how expensive credit reports are. Free credit upgrades. That's rapid rescores. Free rapid rescores. And we know the consumer, we cannot charge the consumer for rapid rescores. However, sometimes we need to do a rapid rescore on 2 different credit bureaus, 3 different credit bureaus. That's $150 a credit bureau. That's $300 to $450. So if you are in retail and they're paying for that, they're wrapping that into your pricing. All right, that's why your pricing is so high. If you're not in retail, you're on the broker side, you're paying for that out of your pocket. I know you are, because I did. We have certain relationships where we're going to cover those for you. We'll cover all your credit reports. We'll cover all your rapid rescores. EPOs. We waive EPOs in many cases through certain investors, right? So you don't have to worry about it. Don't sweat it. Just relax, right? Focus on originating without the boogeyman that's coming behind you. That's really bad. On some of these lenders have the EPO issue bad, very bad. If you're on one side, if you're with one specific lender, you gotta duck and dodge these EPOs, and they're going to be coming for you, right? The EPOs are coming. Get in a space where we can alleviate those EPOs for you. We'll show you how. You don't have to worry about that. Now, you can't be tricky. You can't trigger the EPO yourself. Like you refinance the client and like got paid or did a purchase and got paid, and then try to refinance them 3 months later and get paid again. That doesn't work, right? You can't do that. But if you help with the purchase loan and they refinance somewhere else, which would normally trigger an EPO, right? Not by that same NMLS number, then yes, we'll take care of that for you. We'll cover that for you through certain investors. And we can talk about that in more length too. So when you're looking at paying for credit reports, you're looking for paying for rapid rescores, you're looking to cover, we're covering EPOs. That right there on some of your guys' profit and loss, if you're a branch or even as a regular LO, that saves you a considerable amount of money, right? So when I say best, that's a superlative, and I was happy to use a superlative. You can't use them. We can't use them when we're like talking about our rates and things like that, but we can surely use them when we're comparing one mortgage company to another. And I think I'm absolutely justified, and we were working towards using the superlative of best. When we say best, we mean it, right? Best mortgage platform in the industry. The value for what you pay has the biggest range. And that's how you go and determine where you should be. Okay. So we're out here to earn your guys' commitment business, and we want you to be our partners. Okay. We're going to go further. It doesn't stop. The money is important, and us helping you pay for things is important, right? But we also want to help you generate business. So I was a top producer. I produced hundreds of, I don't know, probably $1 billion in origination altogether. I don't know. I never really added it up, but strong career of doing the origination when I was focused on that. I'm focused on you now. It's all about you. It's all about making you a winner, right? Or just increasing, whether it be whether you come to me and say, I want to marginally improve or I want to substantially improve. I'm all ears, and I'm happy to have those conversations with you guys. Okay. But part of it is being able to get business. How do I get business? How do I enhance my business? If I'm getting 10 deals, how do I move to 20? If I'm doing 6, how do I move higher? That's another thing. This offer is for individuals that are doing a certain amount of production. Okay. Got to be doing 6 deals a year. So we will look at that data, kind of see if you're at 6 deals a year. If you're at 6 deals a year, let's rock and roll. Let's get you higher. If you're not there yet, you got to work to get there. Okay. And then we can talk about you coming onto the platform. All right. So mortgage, realtor, loan officer leads. Again, I was a big lead guy. We have over 1 million leads in our database. These are all from 2022, January until the end of 23. So we bought a ton of data during the period where rates were the highest they've been in the last 25 years. Why do you think I bought all that data? Why do you think I invested in that asset, if you will? Because I knew rates were going to come back down on the back end years. 24, the year we're in now, 25. So we have a lot of individuals who bought homes and refinanced in a period where rates were at their highest level. Follow me here, highest level in 20 years, 25 years. So I see that as a gold mine. We can help you partition out the sales force. We'll talk about the sales force and everything. We can help you get access to some of that stuff. Top realtor registry. We have over 50,000 realtors in our system that have closed 10 deals or more. So that's right there. So you can pull those down and start calling those people too. We have a recruitment program for loan officers that are interested in recruiting. We do a whole rev share thing. So that's on the website. Take a look at that too. But the thing I'm probably most proud of is the business development program. This is unique to our company. You're not going to find a lot of companies that go out there and do this. It took a lot of work. I was working with the law firms. I've worked with regulators. I've really vetted this out to make sure that we can develop something that is super beneficial to our not just realtor partners, but any of our referring partners. I don't care if it's a CPA, financial planner, realtor. Okay, and so on and so forth. But what we're able to do, we're able to hire, this one's focused on realtors, but we have other sites that are focused on different verticals. We're able to hire realtors as business development representatives, and we pay them for the leads that they generate. Get paid for the leads you generate. Now, this is a very polarizing program, okay? And the reason is because when you see it initially, someone might think RESPA, because we've been taught RESPA. We can't give kickbacks and all those sort of things. This particular program, follow me here, was developed by the law firm we work with. It's a prominent law firm within the mortgage industry. It's also been vetted by 5 different individual state regulators. They looked at our program in and out, and all the things that we do make it to where it is viable. I have letters from these regulators, right, saying, hey, this looks good, you're good to go. So we broke the code on this. You will not see this out there. The reason you won't see it out there, and I'll be perfectly honest, especially at some of the bigger companies, it's too hard for them to manage. They can't manage it. If you don't manage it right, you're in trouble, plain and simple. If you don't do one of the 5 pillars that we have in here and don't consistently follow up with it and don't have that infrastructure behind you, the technology, the accountability, watching everything. Yep, we interacted on this date. We did that. I have the conversation in my system, blah, blah. If you don't have all that stuff, you're falling right into probably a violation. So that's why a lot of the companies just won't touch it. So it can be done, and it's done within the confines of what's allowed. It's just, can the company that you work with execute on it? That's the difference with us. I think you guys are starting to get the idea. For those of you that don't know me, you're starting to get a little bit of the idea of my character and who I am and what I try to do, creating Salesforce end-to-end platform, developing business development, creating a business development program, which is extremely innovative and not seen a lot, right? Bringing the cap out to the mortgage industry, because it's not here now, only on the real estate side. Innovation. We're in a commodity business, right? You want to go out there and work with whoever and be the same as everybody else, you're going to have the same results. You got to get with somebody that is innovative company that can help you move the needle, okay? It's not just about who has the lowest price. I brought the lowest price just so you guys don't have to worry about the lowest price. I want you to win, right? So I think before, a lot of people at a lot of these companies, I have 1,000 LOs, I have 2,000 LOs on the broker side anyway, because they gave the most competitive price. But they're going to start to become the dinosaurs. That's a dinosaur mentality, okay? And good for them that they did that at that time period. But now we're evolving and we're coming into a new arena and a new area, okay? So in this new area, we're going to be able to focus in on, sorry, I got distracted. In this new area, we're going to be able to bring more benefits to you as a loan officer past just having a low compensation. We need to help you get deals. We need to show you how to use the One Plus program. We need to show you how to take the $7,000 we have and deliver it to certain individuals that are interested in buying a home, that are eligible for it, and all of which are things that we do. All right. So Let's get past this. Okay, so all-in-one platform, LOS, Meridian Link, CRM. We got the point-of-sale system, it's Salesforce. A personalized phone SMS if you subscribe to that, right? Pricing engine, the communication system is great on the Salesforce mobile app. Our system is second to none. It's Salesforce, and we built it ourselves. So it's Salesforce that we built ourselves. Okay, awesome. All right, so we have full service in-house processing. Our internal team is sort of like, they'll process your file if you want. You're also allowed to use third-party processing. So we're totally fine with that. We have third-party processors that we can refer out to you, okay? So whether you want in-house or third-party, we're okay with that, right? And that's why you see the contract processing underneath. Onboarding and training is awesome. Live, self-paced, recorded training. We have knowledge base, Pathfinder. There's all kinds of amazing things that our main partner Rocket has. Video libraries. This is robust. We built this so that way you can go out there, navigate, and get the information that you need. Whether you're talking about on the Client Direct platform, whether you're talking about on the Rocket platform, you're going to get access to exactly the questions that you need help with. We have SOS hotlines. So if you have an underwriting question, pick up the phone, talk to an underwriter. That's it. We have TBD full approvals, right? So they'll go through and give a full run underwrite on your TBD approval. Thank you to our partner Rocket for both of those things, right? So it's like there's some amazing stuff that we have when you combine it. And that's what we've done. We take the best thing from all these different lenders, okay? Super competitive VA pricing. That's NewRez, right? So it's like we take all of these things and we put it together in the best system, superlative, in the best system in the mortgage industry. And we gave you the best price. We're going to cap out on you, okay? We do coaching, continuous training. I mean, scripts, all this stuff is in the knowledge base. You're able, if you're a self-starter, there is an encyclopedia. There's hours and hours and hours worth of information, videos that I've even done, right? That some of the people here at Client Direct have done to help you guys learn and move the needle on getting more deals. I want to be straightforward. I want to be transparent. I want to compete, right? You don't hear a lot of competition. I'm about competition. When I got into this business, 2012, I think is when I learned what a 1003 was, okay? And then from there, it just went up and went up, went up. My major fuel, if you say, Ramon, how did you not know what a 1003 and a GFE was? Some of you might not know what that is because now I'm getting older. But 1003 GFE, and we used to have to do all our own disclosures. Some of you will laugh and chuckle about that. That's 2012, so that is a little while ago. 2012, 13, yeah, somewhere in there, right? So that is a little while ago now. But the key driver for me, like I wanted to learn, I wanted to do the business, I wanted to be successful. But I used to open up that Scotsman guide and look at the top people. I knew all their names. I knew the top 10 people in the Scotsman guide as far as production before I knew how to read a 1003. So I knew who my competition was. And I said, you know what? One day I'm going to be on that list, right? And 2.5 short years later, I was on that list and I stayed on that list. And I got all the way up to I think it was number 1 in refinance in 2017, right? Not overall production, but refinance, but I've been in the top 5 in overall production, right? So you can come from zero because believe me, in 2012, my production was zero, right? So that's why I don't like to talk about, people are like, oh, production this, how much business did you do? Anytime I see somebody say something that somebody else doesn't like, they go look at their production and throw it out in front of them because now it's out there, right? I just like that a lot. I don't subscribe to that at all because there was a day that, I felt kind of, worried or should I be here and all that sort of stuff because of my production, looking at everybody else's production. But guess what? I closed my ears to that noise. I focused in on who I wanted to focus in on. I said, I'm going to compete. And that became the fuel. And I whipped everybody's ass, right? So if you're out there and you're worried about, and people say production this, or I can't do that, you got to get in the right platform, right? Get in the right platform and then learn your craft and then go out there and kick some ass. And that's what you'll definitely do. That's what I did. And that's what this platform is about. So now let's bring it full circle. I'll be honest. Like my first venture into this business was about me being an originator. It wasn't about creating a company or a big platform. It was my company. I was a broker, but I had one employee at first. Then I got two. Then I hired. Now I thought I was really growing, because then I hired two more people. So we doubled 100%, 2 to 4, right? And I think ultimately when we were doing the 200 million, 250 million a year, I was the main LO. I had 3 LOAs and I had like 2.5 processors, right? So still about 6, 7 people, like 6, 7, 8 people is what we had when we were doing like 250 million a year. So the focus wasn't on creating this bigger company like I am now. So I'm a new kid on the block, really. I mean, we started to build the platform in 2020. We got done with it late 2022. We came out with the brand in 2023, and we developed all this stuff that we've developed up until now. 2024, we are now rolling out what I consider the best platform in the industry. Okay. But just like that, just like 10 years ago, when I didn't know how to read a 1003, but I opened up that book and I looked and I said, oh, there goes number 1. There goes number 2. There goes number 3. We're coming, right? We're coming. It's the same situation now, and I'm here to compete. We are here to compete. We've developed something that's better, and we are going to talk about it. And one way to talk about it is to have these different grids. So we are looking at the loan officers at Barrett, C2, Edge, and Nexa. That's just this week. Next week, I'm going to go after another 4, right? And we're going to talk about the differences between us and them. So in this grid, which you'll have access to, we're able to put information about these different categories, right? I'm just going to run through them really quick. I think it's extremely important. Andrea, as we come to the end of this, can you put my email up there for people? So anybody interested, I want them to email me directly, right? Anybody that's on this call, right? If you spent the time to sit here and listen to me blab for 30 minutes, 35, 40 minutes, then at very minimum, I can put you to the front of the row and talk to you about coming on to this platform, okay? Now, keep in mind, guys, I know I said 0, right? I know I started at 0, and then I went up from there. At Client Direct, though, as we're bringing new LOs on, we need you to have done like 6 loans, at 6 loans over the last year. So that's the half a loan a year, right? So if you're not at that point yet, you still have work to do, right? Get to that point, ping me, talk to me. I'll still have a conversation with you, right? Or we can still interact. Hey, Ramon, I'm working on it. I'm trying to get to that point. Then I want to come over. That's what you'll need to do if you're below that 6. If you're above that 6, it's time to get paid. It's trying to put more money back in your pocket. It's trying to get better pricing. You are already on the road, right? Your car is moving. I'm here to put some rocket fuel in it. That's what we're going to do. We're going to put some rocket fuel inside of your car and get you going even faster. Okay. I need your money in your pocket so you can invest in your business. That's why we have a cap out. We will not take more than $20,000 for any LO. Okay. Any LO. Right? So 1,250 times 16 equals $20,000, right? And that has to be non-delegated loans. Once you are capped out, then you do not pay on non-delegated or broker, right? You get all that money back. All right. Barrett, pay every file. C2, pay every file. Edge, pay every file. Nexa, pay every file. You're going to pay every single file. You are going to pay them some money, right? So again, that's substantial. I talked to a guy yesterday. There's 150 loans a year. So he's somewhere around, just under $1,000. So let's just call it 140,000 is what he paid to one of these companies. He's at one of these companies. I'm not going to say which one. So after he looked at us, he was in shock. He was like, "Holy smoke!" So you mean to tell me I pay you $20,000 and that would put 120,000 back in my pocket? Yes, absolutely, and 100%. Right? This is the best deal. And you know what? Just like Keller Williams did to the real estate, the EXP came, and then Real came, and then I don't know, 30, 40 other ones are now out there. Same thing is going to happen on this side. We just happen to be first. The game today has changed. We brought some new chips to the table, right? We brought a different die, right? The game is going to have to be played a little bit different by some of these other companies. They're going to have to get more competitive. They're not going to be able to take $150,000 from that guy that did 150 loans. All right. So you understand the cap there. The flat fee, $12.50. But again, that stops. Keep in mind that stops. This one at Barrett is lower, but it never stops, right? 10% plus 200 per file. That's a lot if you do business. $9.95. That's forever. That's forever. 50 basis points here at Nexa. Now with Nexa, I think that they can cap out, but it's on a monthly basis. So I would bet, because you don't have enough time to truly cap out, whatever it is, 2 million, 3 million, 4 million, 5, I don't know what it is. Regardless, if it's a reset at every single month, it's not going to work for you. I mean, you won't hit that cap out. And then there's a recruitment aspect too. Don't know a lot about that part of it, but we're looking at just the standard LO and what they would normally get hit with. And that's where we come up with the 50. EPO waiver is enormous. I'm not going to go through all of these. We'll put this out so you guys can see it, or you can email me and ask me for it. But the EPO waiver, we have this with certain investors. So if you put the loan through certain investors, we're going to be able to do this. I know for a fact that Barrett, C2, Edge, Nexa, they do not have true EPO waivers, which means you might temporarily get the EPO waived, but it can always come back on you. You owe it. We have by contract that you do not owe the EPO. We will never be able to collect it from you. You could take us to court on that, and we'd have to you wouldn't pay us the EPO, and we have to pay your lawyer fees, right? Because it's in contract. You will not pay the EPO through certain investors. Okay. Now, make sure you ask the right questions, because other people are going to say, oh, you don't pay an EPO with us either. That's temporary, and it's not by contract. The one word you want is by contract. Okay. By contract, do I not have to pay the EPO, right? Or is it just temporarily forgiven because somebody's in a good mood, but when they get in a bad mood, you're going to have to pay it? Wink, wink. You guys, for those, if you know, right? Sort of thing. All right. You guys got to make sure you join that other group. Credit reports. Let's move on. Credit reports free with certain investors. This is like enormous. This is enormous. Credit is expensive. I just put an average amount of 85 per. If you're doing business, we're going to wipe that out for you. Same thing with the rapid rescores. Okay, rapid rescores, certain investors, free. Everywhere else, $150 per credit bureau. You know the expense. I want to kind of stop right there. The rest of the stuff we kind of talked about already. You see 1099, yes, we do that. A lot of them do. Only one that doesn't. Branch options are up there. We can talk about that if you're wanting to grow and have more loan officers underneath you. We do have a branch option, so that's there. Our platform and systems, because we're so advanced and because we're doing this cap out and everything else, we had to build our own systems, and they're amazing. And they are the thing that enable you to be so successful and to have this low price, because we do have that efficiency. That's what it's about. It's a cost to originate. So their cost to originate is higher at these other places. Why? Because it's a wild, wild west. The LO is responsible. You go out and find your own software, right? You'll still have, I understand the control aspect of things. Oh, let me go back here. Oops. I understand the control aspect of things are owning your data and all that kind of stuff. You'll own your data with us. It's in our contract. We'll send you whatever you want if you happen to leave, but you'll never leave. The pricing is too good. The pricing is too good, and the amount is too good. And other people just can't compete. They're not going to do it. They rather just say, if Ramon wins on that, then congratulations, let them win. But I'm not taking less. I'm taking money out of every one of these loan officers' pocket on every time they close it. I'm going to make some money off of them. They've been doing it for so many years. They're not going to ever change, right? The only thing that's why companies, some companies surface and some companies go away. It's innovation, it's change, it's efficiency, it's cheaper price, right? So that's what's happening here. Okay, I think that's plenty. I really do. I think that's enough. Let's see what else we have on here. Oh, that's it. That was our last slide. Are we good? Say again?
You refresh your email show.
Okay.
I did drop it in the chat.
All right. Do we have any questions?
They got answered.
Okay, wonderful. So I think I did a good job. I covered everything. Listen, guys, you said if I refresh. Okay, let's refresh. You mean go back to slide 1?
The last slide.
Okay. Let me just put this up here for a second. Okay. There we go. So we added that. We added that side. We'll leave that up for a second. You guys can write that down. And yeah, just email me. Email me if you have questions. If you're interested, have questions. Tell your friends that are loan officers about this offer. We are going to continue to beat the horse and get this message out there about us having the absolute best platform. The rates are going to be extremely competitive, a lot better than what you're getting. If you're in retail, we're probably 75 basis points better or so. Okay. Even on the wholesale side, you'll see that we're a little bit more competitive, right? You don't have to. So like there's companies out there where you have to, they use like control your price and all that sort of thing, where you can get an incentive if you put it in yourself. Think of us as already having all the incentives baked in on all the pricing already. So no need to play that game. All right, guys, I think this is good. I appreciate your time. Until next week, you guys get out there, win some business, and we're looking forward to talking to you. Bye.